Hello and welcome to Fin24. With me in studio today, I have economists from Old Mutual Investment Group, Taniko and Grenia. Welcome, Taniko.
Thank you, Ms. Flika.
Taniko, did anything about Minister Gigaba's budget statement surprise you yesterday?
I think surprised is an understatement. In fact, I've really run out of words to describe the midterm budget statement. If you can find any synonyms for bad, please let me know. But it was quite a shocker in terms of market expectations. So the key thing is that revenue shortfall. We had all expected 40 billion of a shortfall, and yesterday projections were that it would reach about 51 billion. So that really takes out the forecast in terms of that fiscal deficit. So in terms of that fiscal consolidation, where Pravin Gordhan in the February budget had said that we would try to bring down that deficit to about 3.1% of GDP. So now, because we don't have enough revenue to cover that, expenditure for the first time since I think we've covered the budget, for the first time we've breached the expenditure ceiling. So we're spending more than we had budgeted to, or rather spending more than we'd said that we would stop spending, right, in terms of that expenditure ceiling. So that means here you have this revenue shortfall, you're spending more than you had budgeted, so you have a wider budget deficit of about 4.3% of GDP.
Contrast that's a huge gap.
It's huge, from 3.1 to 4.3. It's quite a significant gap, definitely. And following from that, so if you think about yourself and I, a normal budget, so if you're spending more than what you have in terms of your income, what do you need to do to cover those costs? You need to take out debt, right?
Yes.
To fund that, which means that we have to take out a bit more debt in order to plug that deficit, particularly in the outer years. So where we thought that the debt to GDP ratio was coming down to a peak of 52% next year, it's now going to reach up to about 61% in the outer year in 2019, 2020. So it's quite critical, it's quite significant that we understand that we have this wider deficit that we need to fund with more debt.
What do you think this budget meant to investors locally and internationally? How did this come across?
You could see that in the Rand. I think that's the key place where you can understand in terms of market reaction. The Rand weakened considerably. It's now sitting at about 14.17. Before that, it was around 13.70, etc. So it's quite a jump. Bond yields as well. So bond yields are government bonds. Those yields have gone up to about 9.17. They were trading there this morning. So it's quite a significant jump from 8.8%. So what the market is saying that this is a shock, it's a surprise. And in terms of investors, now the big question is, does this mean that we're going to get downgraded by the rating agencies? And that's critical, particularly for that local currency rating that we still have in investment grade territory. The minute that drops into sub-investment grade, then we're excluded from that Citi World Global Bond Index. And being excluded from that, so foreign investors, right, if they mandate are for them to invest in bonds that are included in that index, they're going to have to offload those bonds that they have in South Africa.
The question, I think, is where to from here? What do we do? Everybody says, well, there's the elective conference coming in December, and we'll have to wait and see for that. We'll have to wait and see for November to see if a downgrade will take place. But where to from here? Where to from here today?
So it's a very good question. In fact, for the investor, I think the key thing is that if they had any hopes that something could happen in terms of the budget, the facts are out there. He's put out the fact that we have this fiscal crisis, we have low growth. In fact, the growth forecast was very conservative for next year. So we have low growth, we have a situation where we're spending a bit more than we can actually afford to. So the facts are out there for investors. They know what to deal with. There's no uncertainty in terms of that fiscal crisis that we had imagined was going to appear. Going forward, there's November, of course, as you mentioned, the S&P rating downgrade, Moody's as well as Fitch. Fitch has that stable outlook for South Africa. So are they going to change that to negative, and the impact on that in terms of the Rand as well as bonds? And in terms of the Rand, what does that mean for the Reserve Bank as well? So the Reserve Bank have cut in July, and they've said that in order for them to cut interest rates, they need to see the Rand stable, they need to see inflation drifting lower. So now a Rand that's weakened considerably is going to put them back a little, step back, and now think about the interest rate path that they're going to take. So I don't think they're going to cut anytime soon. In fact, now they're going to have to start thinking about whether the second round effects of this weaker rand, does it mean that inflation is going to pick up?
Something that also comes into play is local investors, international investors, but what about the ordinary South African citizen in the street? There are very many ordinary South Africans who were not even aware that Minister Gigaba was tabling a midterm budget policy statement yesterday. How would you explain the significance of what took place yesterday to the ordinary South African? How does it relate to them?
For the man on the street, I think it's very important for them to take a keen interest in what's happening in National Treasury, because it's not just investors who are the stakeholders of National Treasury. In fact, we as citizens are, I think, the most crucial stakeholders, because we contribute in the form of tax. So we need to know what's happening in terms of how they're using our taxes to fund the national budget. So it's very important for us to take an interest, understand what's happening, understand what they're doing, and more importantly, find a way to protect that interest. So voice your concerns in terms of the fact
it's
that
your country.
It's your country.
You're contributing.
That's right.
It's your money.
It's your money, and this is what's happening. Are you happy with that? If not, voice your concerns. And to be honest, it just means that things are not going to be easier anymore. So we had expected, yes, we've got this low inflation, interest rates are going to be cut, some kind of relief for the consumer, you know, to find some money that they can spend a bit more, buy a bit more bread, buy a bit more food for their family. But now it seems like it's going to be a little bit more tougher going forward. It's not going to be an environment where interest rates are going to be cut anytime soon. So it's important for them in terms of understanding that this environment is going to continue to be difficult